All right, good morning. Welcome to Chartbusters. Well, this is a show where we highlight all the buzzing stocks. Today, there's plenty of red on the screen. It's Christmas, but it appears there's more red than green. Manglam, I've got the color wrong. It's green, but I live in hope. Maybe, in fact, the markets will pull back from the low point of the day. But I got it right on Friday. I wore red, and in fact, we were down 200 points odd. Let's see whether or not we can recover. But really, hoping to be home, actually. But yeah, we'll have to do this.
Absolutely. Hope is what the world is thriving on, and that is something we're hoping for 2019 as well as the remainder of 2018. Wish you, your family, and everyone, all of our viewers, a very Merry Christmas and a Happy New Year. You got the color wrong for the overall markets, but a lot of stocks, they're moving high. So you can take your green sheen on them. Something like an oil marketing company pack. We have all those HPCLs, BPCLs, and IOCs of the world mildly in the green as we speak. Crude prices below $54 per barrel. ITC smoking well today. There was a report by Macquarie. That one's up around 1%. And Infosys too. Buyback coming, not coming, don't know. The stock up 1%.
That's right. It's good that ITC and Infosys both are, batting for the bulls. Right. If it wasn't for them, if you pull up a contribution chart, we could have easily been closer towards the 10,700 odd mark. The bulls, they would like to see a bit of recovery. They would like to see a fight towards the 200 DMA. That comes in at around 10,770 odd. So we'll have to keep a close eye on that mark. And just getting to that level will not be important. Crossing that, by a good margin, that's something that the bulls will like, because after Friday's trading session, a lot of those weak bulls would have really got shut out when we ended at the low point of the day.
Absolutely. There was a lot of short covering on the put side, which is what took our markets much lower. But as we speak, Bank Nifty is at the low point of the day, taken lower by SBI, which is currently sitting at the low point of the day. But the fact that we're working on holiday is explained by just two charts. United Breweries, absolutely flat, not moving. But Tata Global Beverages, a lot of coffee being consumed, up around 3.5%. So we'll keep all of that going on through the course of the show. First up, all the top stories that we're tracking this morning. Infosys trades in the green on the back of reports of a likely buyback of $1.6 billion. Announcement likely on the 11th of January along with the company's results.
And Lupin's in focus. The company announces the partnership with AbbVie to develop and commercialize an oncology drug.
Vedanta starts in trade today after the Madras High Court rolls back the NGT order, once again downing the shutters on the Sterlite copper plant in Tuticorin.
And PVR and Inox Leisure, they are in focus after the GST rate on sub-100 rupee tickets is cut to 12% from 18%, and over 100 rupee ticket, GST was cut to around 18% from 28%.
Hero MotoCorp moves in the slow lane. Goldman Sachs downgrades the stock to a sell rating, cuts the target price to 27.73 as the near-term volumes and results will be muted.
Okay, all right. Markets moving lower as we speak. We are seeing select stocks. Actually, let's see what's dragging in the last 20 minutes odd. SBI, that's the naughty boy in there. That's moved lower. JSW Steel as well. Some of these ferrous stocks, they had a really good run this year, and from the top they've seen a lot of profit booking. The problem, Manglam, is that a lot of these companies, they'll have to take price cuts in January first week, because the domestic prices are still at a premium to international prices. So a lot of these ferrous stocks are in focus. Maybe the next couple of days I'll put out a piece as well on that. So we'll keep an eye out on some of these ferrous stocks. And Bharti Airtel, that's coming for some profit booking. I remember close to around a week or so ago, the stock had a good run to around the 325 odd mark. But how do you trade the Nifty from here? Ashwani was short on Friday. He said that, in fact, and he all through the day said that we are going to end at the low point of the day. He got that very, he was absolutely right on that one. But Ashwani, what's the trade today? 10,720. Hold on to those short positions.
See, the short positions should be closed. In fact, right now you should go long on both Nifty and Bank Nifty. 10,680, 700 is a very, very strong support. Plus, you've cleaned out a lot of the weak longs. So that way, 26,750 and 10,680, 700 are important levels. Plus, if you notice, Hang Seng has come back, I think, about 100, 120 points from the lows. Dow futures are up 140. So it is possible that the market gets a few, bears short and then reverses from, fairly strong levels. So that's something you can bet on. I don't think the market is quite in a break down and follow through selling mode. So right now you have 30-40 points kind of stop on the Nifty, almost 100 points on Bank Nifty, and this could work out because the US markets are way overstretched. I mean, they should easily have a 3 to 5 day rally for no reason other than, things are getting way oversold. So that way, incrementally you can't see great amounts of immediate downside. Maybe next year will be a different issue, but some amount of pullback is expected globally. Having said that, Jet Airways is a buy with a stop of 230, target of 252. Federal Bank is a buy with a stop of 90, target of 101. And ITC is a buy with a stop of 275, target of 292.
Right, Ashwani, disclosures?
We have long positions on Bank Nifty.
All right, so that was Ashwani. Thanks a lot for joining in. Long positions on Nifty, and Nifty Bank says perhaps the markets may move in higher on account of being oversold. But one stock on our radar is Inox Leisure. This after over the weekend we got the GST rate reduction in tax slab on the ticket prices, movie ticket prices that is. So to get you a detailed insight on how the cut in ticket prices is likely to impact their business, we have Mr. Deepak Ashar, the director of the company, who joins us on the phone line. Thanks a lot, Mr. Ashar, for joining in. The street believes that this is positive for all the film exhibitors, the likes of PVR as well as Inox. If you could give us some details of your ticket sales, how much of your ticket sales come below 100 rupees a piece, and how much of that is upwards of 100 rupees?
Well, first of all, thanks for having me. Yeah, to answer your question, a very small portion of multiplex cinema ticket sales come at less than 100 rupees. If I remember right, in volume terms, it's about 9%. In value terms, it's about 6 to 7%. So that's not that doesn't move the needle too much. What moves the needle is the fact that more than 90% of our ticket sales are priced at about 100 rupees, for which the GST rate would have gone down from 28% to 18% effective from 1st January, which is when I'm told this is going to be effective from.
Okay, all right. So, Mr. Ashar, it's less than 10% of your total business. So, this should be helping your footfalls, isn't it, and occupancy levels. Because of this cut, it's likely to increase both your occupancy as well as footfall. So, what kind of a number are you looking at in the next quarter, in the next fiscal?
Well, I think the impact is going to be multifold. First of all, with the reduction in ticket prices consequent upon the reduction of GST rates, yes, we would expect more footfalls into our cinemas, which would mean that occupancy levels would go up. So that clearly is a huge positive as far as we are concerned. But there are also several spin-off effects. Because of more footfalls, you see more conversion of people who want to buy. So you can also see increased F&B revenues, even on a per-patron basis. You also see increased advertising revenues, because advertisers usually pay based on the eyeballs on the screens, and if you have more eyeballs, obviously you get higher advertising revenues. So that's one part of it. Clearly, we believe that the viability of the exhibition business would go up significantly. But also, because of the fact that we source content from distributors and producers based on a revenue share model. We share with them the net box office collections. To the extent that the net box office collections would be higher, the payouts to the content creators also would be higher, which we believe will also improve the viability of the film production sector. And hence you would see more movies being made, better movies being made, more screens being set up, overall screen density in the country going up. And to that extent, if I may just add, I think this notion that the reduction of GST rate would lead to a revenue loss, however small, but a revenue loss to the government is, we believe, misplaced, because we believe that the increased exhibition infrastructure as well as increased content creation would more than compensate for that paper loss.
Okay. Mr. Ashar, you spoke about a few points. One is increase in occupancy. You're talking about higher F&B spends, ad revenues, as well as number of screens that are likely to be set up. Let's focus on the first part. Occupancy levels, I believe, for the first couple of quarters for Inox was less than 30%. You could correct me if I'm wrong, but what was the number in the past, in the first half of the year? And what kind of occupancy levels are you looking at, going up? If it's going to help occupancy levels, some kind of a number, if you could help us.
Well, it's difficult to put a number because, as I keep on saying, we are not selling a standardized, homogenized commodity. So it's not a bar of soap or a loaf of bread that you would see the impact of a ticket price increase or decrease on demand immediately. Demand, apart from the fact that it's based on prices, but it's also based on the quality of content. And because the content keeps on changing week to week, it's difficult to point a finger on what exactly is the impact of the or ticket price on occupancy.
Right.
But having said, based on common sense, general economic theory, obviously one would expect, assuming ceteris paribus, the content remains the same, any reduction in ticket price would see improvement in footfalls.
All right. So that brings me to the next question, Mr. Asher. Would you reduce your ticket price now that the GST rate has been reduced?
Absolutely, yes. In fact, the intent is to pass on the benefit of the reduced GST rates to the consumer with effect from 1st January when it comes into place. All
right. Now let's talk about this quarter itself. This quarter, you spoke about the content. We had 2.0. You have a higher share of revenue coming in from the southern part of the country as against the other listed, exhibition companies. That is one. The second film that released over the weekend was Zero. And as we go into year end, there is Simba. Together, all these things, what kind of revenue growth are you expecting in this quarter? And ad revenue growth, has that increased or no?
Well, revenue growth has gone up for several reasons. One is, of course, we have set up many more screens. In fact, Inox has added about 55 screens already this year in the last 9 months and is expected to add another 25 screens over the next 3 months. 80 screen addition in this fiscal year is the most significant growth that any multiplex chain in the country has ever done. So that's going to help in improving revenues. And of course, quality of content. Again, on quality of content, I think it's a mixed bag. Some big movies have not performed as well as they were expected to. But on the other hand, several smaller movies have done much better than what was expected. So, in a sense, they even out each other. And occupancy levels are more or less at par so far. More or less at par with what they were historically, around 28 to 29%. But again, if you look at the lineup of content, the lineup looks extremely encouraging, not just for this month, but even for the next quarter. And hopefully, if they are able to perform as well as they're expected, I think this would be a very good year.
Mr. Asher, you spoke about adding 55 screens so far this year. If you could tell us your screen addition plan, because I was looking through the exchange notices, you've the promoters have increased their stake from 48% to about 51% at 250 rupees a piece. PVR this year has made an acquisition. Tell us a little about your screen addition plan. How much of that comes from acquisitions? How much of that is organic?
Well, we have always stated that we are happy to look at any acquisition opportunity in this sector.
Looking at some right now?
Sorry?
Are you looking at some right now? Are you in talks with someone?
No, we are not in talks with anyone right now. But what I meant to say was that if there is a sense-making opportunity, in the sense that if it is value accretive and if it comes at a price which is good return on investment, we will be happy to look at it. We started the consolidation phase in this sector when we acquired 89 cinemas more than 12 years ago. We acquired Fame, we acquired Satyam, and therefore, we would be happy to look at any sense-making proposition.
Mr. Asher, just looking at the shareholding pattern, the promoters have increased their stake to around 51% odd. A more basic question, Gujarat Fluoro, that was the company that in fact increased its stake. Are you looking at some point of time of simplifying this entire group structure?
In fact, not just looking at it, we have already started implementing it. So, because I'm on the board of Gujarat Fluorochemicals as well, I can mention it. What we have done as a first step is, as you know, Gujarat Fluorochemicals held the chemical business,
right, and
which was directly within Gujarat Fluorochemicals.
Yes.
And it also owned a controlling stake, 51% now in Inox Leisure and 57% in Inox Wind. The first step that we have taken towards that simplifying the structure is we are demerging the chemical business from out of Gujarat Fluorochemicals Limited into a mirror image company, which you might call, say, GFL2. And in lieu of that demerging, every shareholder of GFL, Gujarat Fluorochemicals, will get one share of GFL2. So that process has already started. We have filed the demerger scheme with the stock exchanges last week. And as the process goes, I'm told it takes about 8 to 9 months for that to get done. And once we are done with that, we'll also look at the other
because some investors of Gujarat Fluoro, they say, why should we have this holding company discount? maybe in fact the shares should directly be given to them, then the holding company discount at least goes out of the way. Your comment on that?
But that's exactly what we are doing. When you demerge, see, investors already had an opportunity of investing in the entertainment business because Inox Leisure was separately listed. They had an opportunity of investing in the renewable energy business because Inox Wind also was separately listed. They did not have an opportunity of investing in the chemical business because that was not separately listed as a standalone chemical business. That was listed as GFL, which owned this other stakes as well.
Right.
So by demerging the chemical business, investors will now have an opportunity of investing in a chemicals-only business,
Right.
and therefore there will be, we believe, unlocking of value because of that.
Right, but that doesn't solve the holding company discount, sir. But we get your point. You're trying to simplify the entire group structure. No stress on Inox Wind as of now? It's fully funded, or will one of these companies have to support it?
No, I think it's fully funded as of now, and with the execution of the orders that we picked up in the auctioning regime, I think going forward the cash flows would be positive. The receivables would start going down. Our operating cash will start generating, and we should be able to fund our operations, merely from our sales and execution.
Mr. Asher, before we let you go, just one last question. FY19, your advertising revenue, how high is it likely to grow?
Sorry, I missed your question. I couldn't
In
hear.
FY19, what is likely to be the growth rate of your advertising revenue?
Well, I prefer not to make quantitative predictions, but I think we have demonstrated a fairly robust momentum of growth, and I don't see any reason as to why we should not be able to repeat it going forward as well.
Fair point. Thanks a lot, sir, for joining in. With that, we